We're here with our great trusted lending partner, Kieron with Elevé Mortgage. And Kieron, one of the biggest topics in the financial world is what are mortgage interest rates going to be? And you may not know, I was a mortgage banker for a long time before transitioning into this side of real estate. And when I was a young mortgage banker, I used to follow the Fed's comments all the time. And at that time, Alan Greenspan was the Fed Commission chairperson. One day, the New York Times posted this comment from Alan Greenspan, and I will quote it exactly. He says, "If I've said something you fully understand, then I've made a mistake." That was such a revolutionary statement for me because I realized he was not trying to be transparent at all. So therefore, without his transparency, how am I supposed to know what rates are going to be? So to lead you into where are interest rates going, that's a really big question. But what do you think? What are you seeing from your desk? Where are they going to go? What are the key indicators?
Right, absolutely. That is a crucial question. I remember that. They used to refer to him as the gnomic Alan Greenspan.
That's exactly right. Yeah.
So the short answer is, when the rate's coming down, are they expected to go down? The short answer is yes, most economists expect rates to come down. The long answer is a little bit more technical, a little bit more complicated. Now, rates peaked back in October, and October the 18th, and they've been coming down. They jumped a little bit, but they're still well below that point. Now, what we're really looking at is the Fed's decision of two strategies they're pursuing. One is they're talking about reducing the Fed funds rate. They say their decision is data dependent, and it's basically based on inflation coming down. As we all know, this first 6 months, the economy has been stronger than they expected. Inflation has come down significantly, but not to where they want it to be. So to give you an example, the peak of inflation was just over 9%. That was in June of 2022. We're now down to around 3.5% based on the CPI figures. They want to get it down to 2%. Now this last 1.5% is going to be tough because most of the inflation now is driven by shelter costs and by insurance, neither of which the Fed control. But as they feel comfortable with the economy stabilizing and inflation being under control, we expect the Fed funds rate to come down. That specifically affects short-term rates like home equity loan rates, the rates on your credit card, that sort of thing. Now, what is really interesting is what the Fed have just announced in the end of April. They have been, the second tool for long-term rates is basically how they control the money supply, and they do that through a policy of quantitative easing or quantitative tightening. And since 2022, January of 2022, they've been in a phase of quantitative tightening. Mm-hmm. What that means is they've been trying to restrict the money supply by selling bonds, treasuries, mortgage-backed securities. And to restrict the money supply, the general belief is that rates go up. They announced in April that they're pausing that policy. And one interpretation could be that they're doing that because they haven't been able to reduce the Fed funds rates as quickly as they like. And so this is the second tool in the toolbox.
Right.
I think it's very effective. You saw that they bought a ton of, sold a ton of treasuries back in the pandemic. It started to help lower the rates. Since then they were, as I said, selling them, and now they're putting pause on that. So with luck, that will help reduce rates.
Kieron O'Grady is one of the top mortgage professionals in the country, and we are blessed to have you here on our team and also here in our market. And you can tell from Kieron's answer, it's not simple to determine where interest rates are going to go. And in my career, even today, with interest rates being in the upper sixes for a 30-year conventional fixed mortgage, that's still a relatively very strong, very good rate. So if you're concerned about where interest rates are going to go, just know it's a conversation being had by everybody in the financial market, certainly everybody in the real estate market. The real answer is we don't know. We're keeping a close eye on it, but if you find a home that you love, that fits you, that fits your idea of what your life going forward is, if you can afford to be here, this is such a wonderful place to be. If you're going to leverage a mortgage with one of the best in the business right here, and we will make sure that you're well taken care of. So Kieron, thanks for your insight about where mortgage rates are going to go. Keep a close eye on it. We're counting on you.
Our pleasure, Rick. Thanks for having me.
You're welcome.